Jayson, to yourself.
Yeah, so my three were this competition, global competition we've talked about, inflation, which I think is again secularly going to be more impactful, and that third one though is alpha, and I think the opportunity to drive alpha is something that we're excited about. There's a lot of opportunity there when rates are down at zero, negative, et cetera. I mean, everything does well. Everybody just buy the S&P 500, buy every passive index, and everything goes up. As we look out into the future, we think that we're going to see a fundamental regime change in terms of a different dynamic in the global economy, greater inflation. So that alpha piece is particularly important. And if I take a step back to give you a little context for the money that we manage, so we have about $100 billion is Lincoln general account money. So that's our money that we're investing, premiums coming in, we're investing. We have about $100 billion that's hedging the liabilities. We sell annuities and life insurance products with guarantees. So we have about $100 billion that we use to hedge using derivatives to hedge the risk of that portfolio. But the third pot of money is our sub-advised mutual fund complex. So we have about $200 billion in sub-advised mutual funds. And as we took a step back and we thought about the backdrop of the economy and the macro backdrop, we said, we want to find opportunities to generate more alpha. Where do we not have as much opportunity or as much availability in terms of the funds that we offer that we can either allocate to from a multi-asset class perspective when we're doing model portfolios, or that we can make available to advisors to use with their clients, for example. And so we sat back and we said, okay, where would we go with this? Well, usually, and most frequently with the portfolios of our size and the kind of flows that we have, we work with some of the largest asset managers, a lot of the folks that sponsors here, T. Rowe, Macquarie, others as well. But we took a step back and said, we need small cap. We think we have a gap in small cap value in particular, and we think it's a good time to have quality bias and have that exposure. So we took a step back and we scanned the universe and said, hey, this is a spot where we think we should open up the aperture beyond some of the more household names that we have. And we started thinking about, are there any minority-owned firms? Are there any just more boutique firms that we could think about for this mandate? And we did a broad search, and we ended up hiring Channing Capital to come in and manage a sub-advised small cap value portfolio. We felt like, one, they had a fantastic track record. They were the right size, we thought, for what we were trying to build, and we thought there would be a great partnership and an opportunity for us to work with someone who we hadn't. So exhaustive search, ended up hiring Channing. They've done a fantastic job. I think they're top decile in terms of their performance so far, and we think there's a lot of opportunity into the future. And so we seeded that fund with $100 million, and we've made that available in all the different facets of our funds complex. So our multi-asset portfolio managers can now allocate to Channing Capital, something that we didn't have before. Our policy holders who may have bought a variable universal life insurance policy and they're picking through the funds that they can allocate to, they can allocate to a Channing fund. And so I say this because I think it's a business opportunity, frankly, that came out of a macro backdrop and thinking about the context of the market, with the opportunity for more alpha, to be a little bit more kind of progressive in our thinking and widen that aperture as to whom we might want to work with. And it's been an absolute win-win because we're getting great performance for our portfolios. Our clients are getting great portfolios for their portfolios. We think it's a win for Channing, who hadn't been as well represented perhaps in the insurance asset management type of arena. So now they've got a platform and an opportunity. So I put that out there as perhaps a positive or optimistic outlook on something.
Do you mind me asking how much AUM does Channing now have from yourselves?
Well, I should know the answer to that, and I don't. But it's probably a couple $100 million. I mean, we have the ability within our platform to it can move in a big way. We invest $18 billion a year in new money in our general account, and we see $10 billion of flows into our funds every year. So they'll continue to get their share, and their performance will dictate.
You see, I love that. And we all talk about risk being macro and inflation and interest rate. And sometimes we forget just the basic. It's business risk. So this is a win-win.
Yeah.
It helps you go into where you probably hadn't been branded.
Yeah. Absolutely.
And helps them, touch points in an institutional marketplace that they didn't have, maybe the connection, infrastructure, access.
Yeah, and I think
so
it's a good partnership. So we're excited.